Hello and welcome to another daily market update by Market Intel. My name is Ben and today we want to take a look at the XRP chart. XRP has moved quite dramatically in the last week, so it's important to take a look at this chart, and we want to take a look at whether we're in a breakout or maybe whether we are going to see another dip. So let's go. So at the moment the cryptocurrency market is very interesting again, so it's worth covering them a little bit more frequently. Here we are on the Market Intel website, dailymarketupdate.com. We click here on our cryptocurrencies section. If you register on this website, which you can do completely for free, then you get access to all of these different sectors. We also now cover tech stocks, and you might wanna check that out. So we go to the XRP charts and we wanna take a look at the weekly chart first. Then we're going to take a look at the daily chart. I mean, reason why I cover XRP is because it really moved quite substantially in the last week. There are again some fundamental catalysts that are swirling around, but we're not so much dealing with fundamentals here. It's a technical analysis. It's an Elliott-Wave analysis, and I know XRP is a very, very popular chart and also cryptocurrency, even though if we click on the chart and take a look at the long-term view, it is really a bit of a mess. I mean, this chart long-term is just a sideways range. It is a massive Elliott-Wave triangle. We are tracking this here as an Elliott-Wave triangle in a wave 4. Surely, I mean, triangles can also break out to the downside. The current thesis here on this chart is that it would break to the upside, but it can take a little bit more time. I mean, okay, a little bit more time. I mean, we are now probably in the late stages of this C wave of the triangle. So an Elliott-Wave triangle is just a massive correction. Okay, it's a massive correction and it's just a sideways range. But the problem is with these triangles, they are so boring because they reduce in volatility over time. So it's a contracting triangle here on this chart, and it's a 5-wave pattern, A, B, C, D, E. Each of the waves is a corrective structure, and we are probably in the late stages of this C wave on the chart. The triangles are typically breaking out to the opposite side of the E wave. Now, there are usually a couple of ways how triangles can be counted. In this case, the wave 4 triangle makes sense, and however, we haven't finished it yet. What we can see here on this chart is possibly that a D wave of the triangle is starting soon. Maybe it started already. We're going to take a look at that on the smaller time frame chart, but I just want to make sure that it's clear that either we've started the D wave already or we're in the late stages of the C wave. You can also take a look at this trend line here. It provides some additional support, and with a 37% probability on this weekly chart, we assume that the D wave has already started. So there's just a 37% probability that the D wave has started, and we could see that upside into the region of, and you see it on the chart, $1.26 to $1.57. It's just an ideal target for that D wave. Targets in triangles are not that precise, so it's not ideal. With a 63% probability, the C wave of the triangle could still be unfolding, and we take a look at a microstructure on the 1-day chart. Important to realize, I think, that this D wave isn't really expected to be a breaker to all-time highs, and we likely need a little bit more patience. So there isn't really a great setup here as such. Surely there's the potential to go higher, but it's really only the potential, and there isn't really a great Elliott-Wave setup that would suggest new all-time highs like some other cryptocurrencies. Many cryptos still show that potential. So looking at the daily chart, and before we really dive into this daily chart, quick reminder, you can let me know in the comment section which cryptocurrencies or maybe even tech stocks or other assets you want me to cover in one of the future videos. We still have some slots available this week, so let me know in the comments below. So looking at the daily chart, you can see it in a little bit more detail. This idea that we are moving down in this C wave of this triangle pattern, and the C wave might need one more low. It's not absolutely needed. You can see we can already count this as complete. We can already interpret this as a completed move to the downside. In the blue count, you see the microstructure. This would at best be an ending diagonal anyway, so it's not a high confidence count. So maybe the low is in. I mean, the 37% probability already indicates that, we might have the low already in. I mean, 37%, it is not the highest, but it's also not zero. So it's also a pretty decent probability. Therefore, we are open to the idea the low could be in this wave C. A break above 94 cents, 95 cents would make that clearer. There is not yet the structure on the smaller time frame that would make us confident to really say the low is in. These double bottoms often break at some point. So it's not clearly bullish yet despite the green candles, but we had a lot of green candles here before. So we had a rally here that was in July last year. There were fundamental catalysts there. Then another rally. They were always like corrective rallies, and we haven't even broken above these recent highs in March, October last year, you know, in July last year. So there's a lot of work to do for the bulls. And until we really see a little bit of more, you know, more price action, bullish structures that develop, another low cannot be ruled out. Actually, it's expected. It needs to be considered. And the 28.7 cent level is the critical support level that ideally would be broken in the preferred scenario, in the primary count. Don't get me wrong, we are in both scenarios very close to the end of that C wave. So either we've bottomed already, or we might just need one marginally lower low, and then it's done. That's the update about XRP. Hope you enjoyed the update. Yeah, feel free to leave a like, yeah, to say thank you for free content here on YouTube. Leave us a comment, also subscribe to the channel, and yeah, make sure you register on the website for daily free Elliott-Wave updates. Thank you very much. Bye-bye.